I'm Zurizame M. Andrea and welcome to my vlog. For this vlog, I'm going to tackle about statement of cash flow. So, if you want to learn about statement of cash flows, just keep on watching. Statement of cash flow is a net amount of cash and cash equivalents being transferred into and out of a business. Statement of cash flows measures how well a company generates cash to pay its debt obligation and fund its operating expenses. The statement of cash flow complements the balance sheet and income statement. Statement of cash flow can either be positive or negative. It is calculated by subtracting the cash balance at the beginning of a period, which is also known as opening balance at the starting of a period. To analyze where the cash is coming from and going out, cash flow statements are prepared. Cash flow statements has three main categories: the operating cash flow, investing cash flow, and financing cash flow. The operating cash flow includes day-to-day transactions. The investing cash flow includes transactions which are done for expansion purpose, and the financing cash flow includes transactions relating to the amount of dividend paid out to stockholders. There are two methods of calculating cash flows: the direct method and indirect method. The direct method adds up all the various types of cash payments and receipts, including cash paid to suppliers, cash receipts from customers, and cash paid out in salaries. In indirect method, cash flow from operating activities is calculated by first taking the net income out of a company's income statement. So now, I am going to show you an example of statement of cash flows.
So first, we have to put the title, the name of the company, which is Dinos Company, the statement of cash flow, and then for the year ended December 31, 2018. The next one is cash flow from operating activities. In operating activities, we have cash received from customers, cash paid to suppliers, cash paid to employees, cash paid for interest expense, cash paid for taxation, and cash paid for dividends. And then the net cash or outflow or inflow from operating activities. So now, we will proceed to the cash flow from investing activities. In investing activities, we have purchase of equipment, proceeds from sale of land, and proceeds from sale equipment. And the net cash outflow or inflow from investing activities. The next one is cash flow from financing activities. In financing activities, we have proceeds from shares issued, new shares, and payment of long-term loans, the non-current liabilities. And then the net cash outflow or inflow from financing activities. And then the net change in cash and cash equivalents. Then cash and cash equivalents at beginning of the year. And the cash and cash equivalents at the end of the year. To compute the cash received from customers, we must add the revenue, which is 800,000, then add the accounts receivable beginning, which is 28,000, and minus the accounts receivable end, which is 26,000. To know the value of cash paid to suppliers, we will solve the actual purchases during the year, which is the cost of goods sold, add inventory end, and less inventory beginning. The value of cost of goods sold is 475,000, inventory end is 60,000, the inventory beginning is 0. So the total purchases is 535,000. And then add accounts payable beginning, which is 30,000, and less accounts payable end, which is 33,000. So it will give you 532,000. So the value of cash paid to suppliers is 532,000. In the additional information, interest expense was paid in cash of 8,000. So the value of cash paid for interest expense is 8,000. So the cash paid for taxation is 38,000. Cash dividend is 48,000. For the total of 8,000. Purchase of equipment has a value of negative 36,000. The proceeds from sale of land is 20,000. And the proceeds from sale equipment is 16,000. For the total of 0. The proceeds from shares issued or new shares is 70,000. Payment for long-term loans or non-current liabilities is negative 40,000 and the equal of 30,000. So next, we will proceed at the cash and cash equivalents at the beginning of the year and the cash and cash equivalents at the end of the year. So the cash and cash equivalents at beginning of the year is 22,000 and in the end of the year is 44,000. And to know the value of net change in cash and cash equivalents, add the value of the three cash flow statements. So the value of net change in cash and cash equivalents is 22,000. So 22,000 plus 22,000 is equal to 44,000. And yes, you're done with your cash flow statement. So So I will end this video here. I hope you learned and enjoyed from watching my vlog. Thank you for watching.